Everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, it's 9th of January. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. I'll start off with a high-risk investment warning. I'll keep this on screen for a few moments. I want to thank everyone for signing in this morning, much appreciated. Good morning to you. Good morning, Kim. Good morning, Mia. Raj, good morning to you and welcome. Okay. I want to start getting you guys ready for the new platform. This will be the last week on GoToWebinar. I'll show you where you'll need to log into. Just before I do that, I'm going to go ahead and bring up our market commentaries disclaimer. I'll keep this on screen for a few moments as well. Okay, and references MarketScope 2.0 and TradingView.com. What you are looking at now is the live streams area of TradingView. I'm just going to copy and paste the link into our. I'll just send it to all of you. Just bear with me. You should all receive it. It's tradingview.com/streams/upcoming. Let me know if you don't receive it, and you'll see a whole lot of streams that you can enjoy in TradingView. This is the one I've set up for next week. So starting next week, Monday, you'll need to click on this, and you will be taken to the live stream platform that is what we'll be using. You may have to register an account at TradingView, and then just go through to tradingview.com/streams/upcoming. And what I'll do is I'll just create one of these morning market reviews every day. I will just carry on as always. We'll be using tradingview.com. All right. What we're looking at here now is a real rate. Last we spoke, I said it was moving towards 50. I wanted to see if it was going to cross over 50. It did cross over. So we've got some upwards movement in terms of the rate, but it looks like the rate is perhaps flattening out, coming back to 50. And it's going to be interesting here because I don't think that the real rate is in a position that helps us at the moment. It's moving sideways. So as we move sideways, it's tending towards 50 here. Good morning, Indran. Nice in the webinar. It's moving towards 50 here. So if it stays on 50 and we move sideways, we kind of lose the driver. We lose the real rate as one of the drivers that we're looking at in terms of our trading strategy, so to speak. Let's just go ahead in the US dollar beneath this to see how it's been behaving. See if this upward movement here has affected US dollar. So let's just go ahead, we'll click plus here, and US dollar, just go through and take it into a new pay. Perhaps some slight upward movement just over here. And it has sort of stopped moving higher, but it's moving sideways, and I think it's largely a function of the fact that our real rate not really doing much. It's either got to pop above or hold, and then some sort of momentum there, and then we want to see if we can exploit any of the correlation coefficients. So let's just take a look at, say, NASDAQ and S&P, given that that it looks like we've started moving sideways in the real rate. So we'll just go there, change it through to S&P. I'll just use the FXCM CFD, right? And what we'll do is we'll put this on the, and you can see, well, wait, no surprise there, as the real rate not moving from left to right, we're starting to move. So the idea here is, of course, if we're starting to drift with the real rate, well, that's going to hurt us as traders because we need volatility to trade, right? If we don't have that volatility and if we're just moving in a trading range, that's not ideal. And let's just take a look at NASDAQ as well. So we'll put in your NAS 100, use the FXCM CFD, right, and there is a basic sideways here as well. A little bit more pronounced is the fact that as the real rate moved upwards, we did here. That makes some sense, and the reason it makes some sense is because the NASDAQ would be more sensitive to rate adjustments. But again, I want to just draw your attention to the fact that we start to shift sideways. Okay, we need, in my opinion, sort of directional movement. So something like this, and let's take NASDAQ up, something like this. 1, 2, 1, 2, 2. Let's just make this a solid line, and then potentially the next 1, 2. Okay, that will go a long way in terms of sorting out some sort of directional bias, wouldn't it? James just asking what he missed. James, just put in a address. I'll just send it to you, and you're going to have to get used to use this. You're going to have to get used to this this address. From next Monday, we're going to be doing a webinar as a live stream on FXCM, on TradingView. I'm begging about it. Okay. Right, let's go back here. All right, let's try to do some sort of technical analysis. Given the fact that we're starting to drift sideways, so let's just bring up market scope. Okay, let's just go through to that S&P 500. Now remember, the S&P 500 is starting to drift. Let's go through to the no, let's keep it on daily. Let's go to this one. We're starting to see some sort of sideways drift here. Okay, so we've got a, let's call this a rectangle. Okay, for now. Let's just call this a rectangle for now. It could change up, could become some sort of head and shoulders. It's very small to be a head and shoulders. It's sort of a sideways rectangle, and we want to see if it's going to break up to the upside or the downside. Again, I'm going to say that breakout is going to be very much dependent on how the real rate behaves. So this is all beholden to the underlying fundamentals of key drivers. Okay, so what we can do, we can just say, all right, go through to the weekly. We are looking bullish. Okay, we're above the 30-week exponential moving average. The RSI is above 50. Okay, it's got some nice positioning in terms of 50. This is a trend following indicator. It's called the directional moving list, the DMI. The fact that the green or the plus DMI is above the red or the minus DMI suggests that there's upwards momentum as well. But I think that we're going to have to be in some resistance here. Okay, so we've got this resistance level, and the resistance level's round about 4790. Let's call it 4790. Go through to the daily chart. Okay, let's put in our resistance level here. And now we want to see if we're going to move above this resistance level. Again, very much relying on the way the interest rates are going to move. Now, we can take this failure swing out. We don't need it anymore. The failure swing was very much suggesting to us that we are moving into a situation where upwards momentum is hard to come by. Okay, now let's add in a trend line here. So this is the first trend line. So we can see if we break this trend line. The idea here is we need the S&P to move into zone 1. Once it goes into zone 1, it's going to need to take out this resistance level, and we're going to need to see the RSI move up towards this trend line. I don't really like this trend line. It's very sort of shallow. I'd like it deeper. Nevertheless, we'll keep an eye on it. But the idea here is we need to see some sort of movement go to zone. We're not there. We're actually in zone 2. So we in the neutral area of the S&P 500. Well, if we're in the neutral area of the S&P 500, why are we in the neutral area in the S&P 500? Well, the key driver that's been pushing the market, interest rates, starting to drift as well. There are other drivers. There are other drivers that we would need to consider. The other drivers would be more on the company side. So how would earnings, are we going to see better earnings? Is earnings going to be a driver that pushes companies up? We have to keep an eye on that. And a key determinant of earnings and future earnings would be artificial intelligence. So the artificial intelligence story is in here as well. But at the moment, it just seems to be that the primary determinant seems to be rates. And those rates are something that we're going to keep our eye on. Let's take a look at the dollar and see if we can come up with some sort of technical analysis on the US dollar. Yeah, Raj saying delayed cuts by the Fed. So what has happened is that, number one, we saw the minutes come out last Wednesday. The minutes were less dovish than previous communications that we had received in the market. And then, of course, we got that jobs data on Friday, and the jobs data was very strong, suggesting that the Fed doesn't have to cut rates soon. Okay, so we're kind of in this no man's land. We're in the middle of zone 2, not a comfortable place to be for traders. All right, let's take a look at US dollar. All right, let's clean up somewhat. So let's just go through the chart elements. Let's take out the lines. And let's take out the labels, no peaks, no troughs. Okay, we can take out the arrows, and let's even take out the rectangle. Okay, so where is the RSI for the dollar? Well, it's starting to drift around 50. It's oscillating around 50. Well, that's no good for us. If it's oscillating around 50, that's suggesting equilibrium. Well, guess where we are? We're in the middle of zone 2. So we started off the year with the S&P 500 in zone 2. We're starting off the year with the US dollar in zone 2, and we're starting off the year with a rate drift. Okay. So again, if anybody in their trading is not seeing any results, I don't think you're seeing particularly bad results, but I would suggest you're not seeing particularly good results. It's because we drifted. Okay, we're in that zone 2. So we need to see this build-up of volatility. And that's what we're going to be monitoring over the next few days. Let's just do more charts. Let's do gold and let's do the DAX. So we'll do gold first. All right. Now, if the dollar is drifting, okay, that's going to have an effect on the yellow metal. Okay, it's going to have an effect on the yellow metal. And what's happening with the yellow metal? It's drifting. It's drifting. Okay. So we've kind of lost the momentum here. Where are we? So this is another confirmation. We've dipped below 50, but I suspect we're going to get some sort of oscillation around 50 until the drivers of the market show more meaningful direction. So just as S&P 500 is drifting, just as the dollar is drifting, so gold is drifting as well. And just the last chart for this morning, okay, is we're going to go through to the DAX. All right, and where are we with the DAX? All right, we're in zone 2. We're in zone 2. Again, look at that drift. There was a little bit of a breakdown, but it's recovered, but we're moving in the sideways pattern. There is a squeezing in the Bollinger here. General Bollinger theory suggests that when there is a squeeze on the Bollinger Bands, it's generally a calm before the storm. So maybe telling us that something's going to happen, there's going to be an expansion of volatility. Well, that's good if there is going to be an expansion of volatility. But we're going to just track it in terms of, is the expansion going to be in zone 1 or zone 3? Right now, not really helping us. We are in zone 2. So what's the conclusion? What's the takeaway of today's webinar? Is that the volatility is not there. We sideways drifting. The key to that is that real rates are drifting. Why? Raj told us, because there's no real impetus to drop rates soon. Okay, in other words, we just kind of caught in no man's land, and perhaps earnings come in, some sort of earnings or artificial intelligence themed stories come in and help determine some sort of direction, but we don't have that just yet. At the moment, we've just got this, unfortunately, slow moving market, not first price for us as traders. We'll monitor this going forward. All right. Cheers, Raj. We're going to wrap up here. Squeeze Bollingers. Yeah, exactly. We've got the squeeze Bollingers here already. All right. Any questions before we wrap up? Any other questions before we wrap up? All right. Nothing coming through. So let's wrap up here, and hopefully we get some sort of catalyst going, improving the volatility. Thanks. Please send the link. I did send the link. Let me try that again. If you don't get this, Kim, just email me and I'll email you the link. Okay. All right, guys. Yeah, I am taking a bit of a seat. Thanks very much, Anna. All right, guys. Cheers. Catch you tomorrow. Have a great day.